Oh, pardon me. I need to do some hedging trades. What's going on, FinTwit? Welcome to the Rotation Report live market update. I'm Aaron Jackson. You can find me across the internet at Rotation Report. And today we have a very special co-host, Evan Medeiros. He's founder of the Trade Risk, and he's a rules-based trader. And boy, don't you wish you had a few more rules these days? How's it going, Evan?
What's good, Aaron? Man, I love this intro. I feel like every time I've tuned in to your episodes, I'm always like 10 minutes late. And so props to the team, man. You got someone, you're pulling some strings over there at StockTwits. You got a nice intro. It's jamming. I'm getting pumped up. I'm watching my account go down. This is exciting.
Yes, we're living the dream. Living the dream. Oh man. So what do we think here? Oh boy, S&P futures off 4.5, 5%. That's a tough little start to the day.
Tough start to the day, given about, what, half back so far, which I mean, it's pretty insane. I mean, yesterday was insane. I mean, I've been trading since what, 2008, 9, kind of coming up in that, kind of right at the tail end of the financial crisis. And obviously, a lot in between, but my goodness, yesterday was a hell of a range and a reaction and a move in the markets. So, one for the history books.
Indeed. But yeah, so let's get into it. Of
Yep,
course, who knows how, I guess our charts are already outdated. Yeah, probably. Uh,
probably.
every week we've been starting with the S&P 500 and this giant, massive technical bear divergence that build up in the RSI, and you get into the day today. You had this massive reversal, and the question I've had for it is, hey, is that enough of a washout? We would have loved to see it hit the 4,600 area right there with the 200 week moving average. But you did get the RSI close last week into the low 20 or into the high 20s. That's close. Still think we would have preferred a little more. What do you think?
Yeah, I mean, look, it's definitely some good fear. Like for sure, you can throw every metric on there. Breadth, internals, VIX, put call ratio, AAI surveys. I mean, things are washed out, right? People are bearish on this market, and so that sets up opportunity for sure, right? So like, is it the low? I mean, who knows, right? We can debate for the next 2 hours.
Sure.
Neither of us actually know, but like, depending on your style, trading horizon, like you're getting some opportunity here, right? People are scared shitless, right? So
Yeah.
there's opportunity. I think it was a good washout, but here's the problem: is okay. Yesterday reset that quite a bit, right? So much for those oversold metrics. We went up
Hmm.
10% in a day. I mean, so now it's actually a lot harder to me, right? I think buying the 20% down SPY again. So much easier to say in hindsight, a little bit
Sure.
easier. But now that we've had a 12% rip and now we're starting to fall back down, it's like, okay, now
Yeah.
we have to play the trading game and the
All right, so I
volatility.
think we should just sum up what happened over the last week, right? Last Wednesday, right? The big Liberation Day failure.
Yeah.
Basically, a lot of models broke. I think a lot of professionals, like myself and Tom Lee, me and Tom Lee were the same, right? Both, from Michigan. But anyways, yeah, our models broke on the risk on stuff, like the oil to gold absolutely broke down. Everyone's like, oh, global trade's going to stop.
Nope.
We don't know about that. We're going to need a couple more weekly closes to reevaluate that stuff. But everyone's models broke. And then you get to Monday, and that's day three. And when there's a big sell off event like that on some news, the professionals, they say, wait for day three, right? You come in and hammer day three. And all those day three lows held right before we got yesterday's rip. So, there's some people that traded into that, and there's some other people who have just bought some long term positions against those lows. And those are great. Those Monday lows are great levels to shoot against, I would say.
Yep. Yep.
And then, yeah, look at the Oh man, the VIX. What do you think?
I mean, it's like again, just more reiteration of the fear that's out there. Now, whether it's the low, again, we can debate this all day, but we're seeing a lot of fear out there. The VIX over 30, 35. I think right now it's north of 40.
47.
Okay, so like, that's implying what, a 3% daily range, give or take 2.5%, 3%, like up or down day. Just for the simple math, as traders, especially new people that are coming in here and first time seeing a VIX over 40 and trading a market like this, you're anticipating basically a 3% rate, a daily move in the S&P. And then when you go down to the individual stock level, you could probably triple that, right? So there's some movement in here, right? And the VIX over at these levels, it is hard to sustain. You can see in the box on this chart, like COVID times, we spent, basically 8 weeks or so, 9 weeks or so in the north of 30, 35 area. And then the GFC, we spent months. But like, I think we're in a regime where volatility is going to stay above 30 for some time. I don't think it's going away.
Yeah, going basically singling out China and be like, nope, you're the enemy. Yeah, seems not great.
Right.
Seems not great. And then again, we were talking, is this enough of a washout? Boy, you got down to 15% of the
Yeah.
Nasdaq stocks above the 200-day moving average.
Yep.
Those are historically, pretty good buying opportunities down there. I mean, every single one of them, you're like, yep, I wanted to be buying some stocks down there.
Yep. Yep. I like it. Yep.
And then, oh boy, the small craps,
Ugh.
kind of bottomed in the middle of nowhere. Maybe you disagree. I was thinking, you get that 4,600 in the S&P 500, you get down to about 160, low 160s in the small caps. Maybe you have a nice little trade lining up there, but kind of no man's land.
I'm so disinterested from small caps, which is probably a great buy signal. Like it's just like they're not even hitting my radar routine anymore. I'm just that disinterested, so it's probably a buy just because I don't even want to look at them.
Yes, apathy is a great
Yep.
tell.
Yep.
And then the interesting thing, we're talking, this huge washout, this decline that's as big as Great Financial Crisis,
Yep.
1987, all the good sell-offs, the tech bubble bursting, all of these good sell-offs. Wait a minute, smooth advanced decline breath is like nowhere near like greatest, wipeout in history. It's kind of just getting there to, run-of-the-mill correction.
Yeah, I haven't used the summation in a long time, but man, yeah, it's true. I mean, there's still room to go, I guess, when you look at something like this.
Yeah, it is a little bit of a lagging indicator. So I think, yeah, even yesterday it still dropped despite the, whatever 90 some percent up day. 90
Yeah.
was it 97? And
Yep.
then, but we do have some strength. Really interesting chart in the S&P 500 here. You see the S&P 500 sold off pretty bigly, and then
Yep.
you've got Scott Besson being like, no, this is a Mag 7 problem, not a market problem. And he's looking at the S&P 500 advanced decline line. Apparently, my man Scott. Uh, but interestingly, if we pop up the RSP at the same time, it looks just like the S&P 500. So I find that to be pretty interesting, despite the whole big divergence here in the advanced decline line.
Yeah, it is a little curious. I mean, when we look back, yeah, I mean, it's hard to grapple with. I mean, there was some I mean, there's clearly rotation out of Mag 7. Mag 7 still getting hit the hardest. I think if you throw on like just the Mag 7 ETF versus Qs, I mean, it's still drawing down harder. So there's definitely a little bit of flight away from those names, and I guess ostensibly into like some of these other sectors. But like you said, the equal weight's not really a great place to hide either. I mean, it's it's still painful.
Yeah, absolutely not. But I just kind of, we're counting that as a positive until it's not.
Yeah.
Until it's not, because coming into the year, there were plenty of positives. I've got here. We're still this government spending. It takes years to get it going and in motion. And if we get past this policy uncertainty peak here and just kind of not blow up the world in the meantime, lots to like there. We're going to be watching BlackRock and your banks and all the private equity and private credit and all them boys. They've been telling us, look, as soon as we get some policy certainty, there's a lot of money on the sidelines. And if you want to say that's a stabilizing factor for the bond markets, fantastic. It all could be. We'll just keep an eye on that this earnings season. And then, just plenty of CapEx coming down the pipe, whether,
Yep.
No matter what you say. So I think there are reasons for hope.
Yes.
But one chart that stood out into today, especially with that, was that how big did semis go up yesterday? Huge. I don't know. I saw 3x semis was up 50 some percent yesterday.
Yeah.
Nvidia versus the Nasdaq 100 and the S&P 500. Is that a big floor there, or is that a big old topping base?
Yeah. I mean, look, you want semis to you really need semis to work. I mean, they've become such a big part of the market weighted indices, and so they've been sluggish for a while now, like this chart shows. Since mid 2024, semis have been telegraphing sideways chop digestion. I mean, it's hard for me to believe with the secular trends that are happening in the world, AI, but just everything else, that semis are going to, lead to some type of big secular downcline. Like it doesn't make sense to me. Like this feels like opportunity to me. It's one of the places I've been fishing. I think you might still have to be patient, though. I think you might have to still stay patient. We could chop around here for another 6 to 10 months, right? But
Sure.
this is, I don't know. It's a scary world if this is a topping pattern that sends us back down to, multi-year lows.
Sure, sure. I suppose time will tell. But
Yep.
speaking of scary, it was funny. All week, people are like, "Oh, China's selling the U.S. Treasuries. Oh my God!" No, friends, it's even worse. The Cayman Islands hedge funds were selling the U.S. Treasuries, and boy, look at that 10-year Treasury yield rip. Oh man! And if you didn't know, like last year, like these hedge funds, I guess they were the biggest buyers of the U.S. Treasuries, and they're just doing it as like a leverage trade. They call it the basis trade.
Yep.
So that's kind of scary as that blows up. They are the big buyers of our bonds. So it's like, okay, yields going up. The market wants to interpret that as inflation, but what if everybody just broke and there's just not enough money in the world to be buying the U.S. Treasuries?
This is a scary chart to me. I mean, this is probably one of the scariest things that unfolded over the past couple of days because I mean, if we're going to take the administration's word at face value that their priority is getting this 10-year yield down so they can refi debt or whatever else, right? Like this is kind of a little bit of a plumbing problem here, I'd say at this point. So if this continues to scream higher while stocks go down, right? The infamous 60-40 portfolio, what's hedging what? This is going to be a painful experience, I think.
Yeah, we'll just see. We'll have to see how big that trade actually is,
Yeah.
right? Like,
Yep.
it might keep going, but yeah, you're right. It's a plumbing problem. And, if we're looking for bottoms in markets, we're looking for Fed interventions, a little, easing of the plumbing issues. Those are what we're looking for right now.
Yeah, that's it. I mean, this is the same chart, basically, just the 10-year yield, right? And you can see, everybody was looking at this nice classic kind of, oh, maybe a head and shoulders rollover that's going to take us right down to 3.5%, nice and orderly in the 10-year Treasury yield. And then you see the oops, and we just rip the last four sessions north of 4.2. And this is what's going to get the Fed's attention, though, right? I mean, if you're looking for Fed intervention, faster cuts, and repo markets to open up and liquidity to come sloshing back into the market, it's probably going to be something that breaks on the credit side, right? So keep an eye on this, but to me, this is telling me there's some issues here. I'm not really trusting the stock market rally while this is happening.
For sure. Yeah, no, Friday was great, wasn't it? It's like, oh, come on, guys, everybody's going crazy. And you're like,
Right.
come on, they just wanted lower yields. It's fine. It was not fine.
Nope.
And then, yeah, so this is showing up. You're like, oh my God, this market, it's a nightmare. I want some defense. Well, maybe you don't want some defense. We've got S&P 500 dividend names. That's the ETF SDY versus the S&P 500. You can see that recent push higher. It is not sticking at all. And I think if we're getting the tells we think we're getting from rates, you probably don't want to look at these places for defense because everyone's already been looking to these names for defense for quite some time.
Yep. Well said.
Pretty expensive stocks. And then, but if you want some actual defense, okay. China's a little mad, a little angry, a little fired up. How about cybersecurity? Once again, I don't know if this is the case now. It is an hour-old chart, but yeah, cybersecurity ETF versus SPY, relative strength, new high for the swing, approaching a pretty huge level here. And, we'll see if it can persist. But then you look at the cybersecurity ETF itself, and you're like, oh, wait a minute. That is a top, and that is a back test of the top.
Yeah.
So, is cybersecurity a big enough priority to where we just want to be there, or are the stocks just too damn expensive, and it's a risk-off period, and we kind of want to avoid? Big question.
Yeah, that's a tricky one. I mean, that chart looks terrible. It's not a chart I would really want to be buying here, and not without more proof. I mean, but like you say, there are some like CrowdStrike is like an individual name that's like that chart's actually semi okay. Like it looks decent in a spot. So yeah, you get a stock picker's market, right? Like this is where the work comes in. But
Yeah, I'm
no,
afraid. I'm afraid on that CrowdStrike. It ripped really hard, but right back to the old fake breakout area,
yeah,
380, 390. Lots of resistance there, but we'll know more in a couple weeks with a lot of these charts.
yep,
And then yeah, bank earnings tomorrow. I think yes, we've got Morgan Stanley, and the question is that we're going to be checking this chart at the end of the month. Like, All right. Is this all one big fake breakout here the last few months, or is this just one big back test and now everything's going to be fine and we're just going to buy it and it's going to be a great opportunity?
Do earnings still matter? I don't know. Right? That's the
The
question.
reaction to them throwing in the kitchen sink and blaming,
Yep.
tariffs on Trump on everything on Trump. Yeah. I mean, the
Everybody's
reaction,
got to pass. Everybody's got to pass this season, right?
yeah.
I think the only thing that we need to be doing is like creating Truth Social accounts and watching what the president tweets, right? Isn't that what matters now?
I'll tell you what, we're all Nancy Pelosi now, huh?
Okay, yeah,
Yeah,
exactly.
okay, I like it. Let the
We're all
people be
criminals,
Nancy. We like it. That's what we all want. So,
right?
Anyways, is Truth Social tied to DJT? Is that why it was ripping? Is that the same?
Yeah, I believe it's a subsidiary. I think that's under their umbrella. Yeah.
Okay, well, man, putting that one on the watch list and then firing up an account and then oh boy, Bitcoin. Boy, what a topic we have here. I don't know. Does it exist?
Don't get me
I don't
excited.
know. Is it a creature of just excess leverage and excess money printing? Yes, but can it sustain in a world of we might have some debt deleveraging here? We might have liquidity issues. I mean, kind of interesting stuff. The daily chart to me, I was just looking at it, and it looks like a base under a base at the moment. Maybe you get down to about 62, 61,000, something like that. Maybe. Um, but I know you have some really good thoughts, and I like this Bitcoin monthly view. I mean, nice uptrend firmly intact here. It looks good. So tell us, Evan, why does Bitcoin exist?
Yeah, I mean, Bitcoin, I don't think it's any secret right now. I still think this is a secular trend that is something you want to own over the next multiple years, to say the least. But we can leave that there. Technically, let's look at technicals here for a second. I mean, this is the long-term view. This is what I'm paying attention to the most right now. This looks pretty healthy still long term. You said down to 60s. That would start to scare me a little bit.
Right.
I'm fine with a retest of 2024 range highs. I'm fine with a 70K, 72K. I feel like that's all pretty innocent and quite honestly expected. Um, a quick wick down to 66, which Bitcoin loves to do, right? Like if we just get some panic liquidations that just happens in a 24-hour period, okay, I'm fine with that. But I think for me, over 70, this is um this is intact. I think as you start to roll over 70, you start to get more dicey. That's the way I'm
Okay.
looking at it on the
So then,
monthly.
maybe buy when Michael Saylor blows up. Okay. All right. Or maybe
Yes.
we'll see. We'll see.
I
And
got a
then,
couple
yeah, the
more. Yeah.
daily.
Yeah.
Down.
So just a more tight view of the daily here. I mean, look, it's grinding down right now, I think, and that chart is already obsolete because I think we're trading at like 78K real time. So, it's making lower lows here. The lows are getting a little less, separated. So again, it just it needs to actually turn, right? It's still kind of a guilty grind lower here. Good place to sell covered calls or some things like that I've been doing, but you're waiting. It's the wait, it's the chop, it's the grind lower, and it's frustrating a lot of long-term bulls like me.
Absolutely. But yeah, the interesting thing is you take the Bitcoin versus the indices. Wow, QQQ. It never
Yeah,
broke up.
it's trying to, right? It's flirting with those highs, and I think a lot of Bitcoiners are actually, everybody was touting like this 4-year cycle, and I'm not a big believer in that per se. I mean, yes, clearly there's a pattern there, but I'm not hanging my hat on a 4-year cycle going forward. But Bitcoin over 4 years has been pretty crap. I mean, in terms of its relative existence, it hasn't been that spectacular to have a ton of cash there for the past 4 years. So, but look at it versus Qs and like, okay, we see a base, we see an uptrend, it's trying to hold, it's kind of getting to a tight decision point. Are we breaking up? Or are we rolling over? I think this is going to be interesting.
Ooh, yeah, I don't like how. Let's see
Yeah,
if it was it a monthly. Yeah, let's
that's a
get to the end
monthly.
of the
That's a
month.
long term.
That looks like toppy as can be. And
Yep.
I think Solana. I'm going to skip ahead. Remind me about Solana.
Yep.
That's an interesting one. But yeah, I had the S&P
Yep.
500 versus Bitcoin. This is an old chart. I didn't. Yeah, it's kind of the same thing, right? Stuck right at that 2021 peak. That bull market liquidity peak. And wow, interesting stuff. It's like, yeah, well, okay, if they're stalling out, that's interesting. But you give the trend line still intact. The structure overall is still intact, even if it's kind of,
Yeah. Slowing down.
yeah. But then, yeah, Solana, very interesting. I didn't notice Solana hit the 200-week moving average yesterday, and well, probably below it today or below the range today. But yeah, that 120 area has stood out for a while.
120 area stood out for a while. Solana, I think, is just, yeah, I mean, as we think about all these, we're going out on the risk spectrum even more, right? And so, like, if you got stocks going down and the market's that uncertain and there's just so much geopolitical and trade and uncertainty everywhere, who the hell is going to want to own all this digital crap, right? And Solana's ecosystem was really the linchpin was meme coin trading and DEX trading and like all this stuff, and that's all drying up. That activity is drying up, and you
Okay.
got some VC unlocks happening. So it's a tough kind of spot to be here.
That is.
I will say
Mhm.
there is a Solana closed end fund now trading on the stock market. You can get, or actually, I think it might be futures. It might be a futures ETF.
Oh, well, if we didn't have enough ways to lose money.
That's right. Wait for the 2X's.
Yeah, so when I look at it, I see an all-time range fake breakout, and that's like the dominant story here. So yeah, I mean, you could see the world in which 120 is the top here. You got your nice little relief rally, and then that's it for now.
Yeah, I mean, weekly close over 125. You can probably trade it against a failed breakdown, but that's not the environment we live in now. We're
No.
trading less than 110. So until and if it can get back over there, it's that's a tough spot to be.
Yeah, Nasdaq's down 7%. Buy some Solana. Yeah, right.
Right.
Yeah, right.
Yeah.
Not happening. And then yeah. So let's talk a little bit of process. After all, you
Yep.
are a rules-based trader. So yeah, let's talk about your systems a little bit. I don't even know how to pronounce them. Galahad?
Yep.
Is that the trend following system?
Galahad's our all-weather sort of trend-following system. These are all Knights of the Round Table. We'll have to come back and do a nice, a nice King Arthur. We'll dress up and all, right? I'll put you
Video
in one.
breakdown. There we go. There we go. I like it. So yeah, tell us a little bit about it.
Yeah. So basically, we've got two trading systems that have been in production now for some time, but basically, this one is kind of what I consider to be like a buy and hold index replacement. Like it's trying to be an all-weather kind of compete with buy and hold, lower the drawdowns, make the ride easier to digest, a superior version of 60/40. So trying to get like returns of it, beat the returns of the S&P 500 with the risk characteristics of like a 60/40. The old 60/40. I don't know what the new
Hmm.
60/40 is going to look like.
The
That
risk
60/40
characteristics
going
of the new
forward is scary.
64. I don't like this. I
Yeah.
don't.
Yeah,
Oh,
we got to change our marketing material.
yeah, I was gonna say, do you have another guy, another person? Yeah, okay. And then I think a lot more people would be interested in your swing trading system, Lamarack. Lamarack.
Yeah, Lamerick, the swing trading system. So this one's very tactical, active. Again, for the degens out there, like the returns are still just not going to be tremendously excited. But look, there's a thing called leverage and options, and you can just lever things up. But this chart here is a chart of these are all of our closed trades for Lamerick this year to date. And it's been a pretty, I mean, lousy year, average year. I don't know how you want to characterize it. We're basically, so I looked at the account yesterday at the close, we were slightly up on the year. This now going into today, we're probably going to be slightly down. So we're basically flat on the year. You can see there's no real edge there. Like we're just kind of spinning our wheels. It's short-term trading. We can't catch anything, and we're just having a little bit of a tough time right now. If you go to the next slide, this was last year's distribution of trades. So these are just individual trades. And so it's a negative skew system, right? To
Mhm.
be very fancy and vernacular. So like basically it just means we win more. So generally have like a 60 or 70% win rate, but the losers are slightly bigger. And that is so uncomfortable for people. It
Yeah.
sounds like you sound like, oh yeah, you win 70% of the time. Oh yeah, sure. Sign me up, sign me up. But when you see some of the right, that tail can be painful. And so this is really what a good year looks like. This is a 20% year or whatever, right? Like
Mhm.
this is last year. This is a good year. This is the distribution we look for. This year, we're spinning our wheels. So I guess from a process standpoint, I would just say like, if you're trading and you're struggling right now, look, so am I, right? Or so are trading systems, right? And I'm a quote unquote professional. So like, this is a tricky environment. It's not exactly hitting our stride on this system, but if we want to benchmark versus the Qs, I guess flat on the year is pretty good
I
versus
was going to say benchmark it versus full-on discretionary retail.
yeah,
Let's
there we go.
there's your
We're
benchmark. There's a
crushing
good
it.
benchmark. So I did have a couple of questions. Like, so is this just U.S. stocks, or is this do you include other things?
So for this system, it's only trading S&P 100 stocks and it's
Okay.
trading Nasdaq 100 stocks. So it is trading just the big guys.
I like it.
And yeah, and so it's been a tough year for them, which obviously makes this tough. Now, this is a long short system, so it will short, but it's very picky on the short side. It's hard to systematically short stocks. I can tell you that. But it is making money on its short trades are very profitable this year, as one might imagine. It just hasn't had many. It's just had like 10 of them versus 40 temps at longs, and so it's just not able to catch its footing yet. But the one thing that's interesting about this system, I can always kind of tell when a tougher market downturn is going to happen is because we usually take a bigger drawdown earlier. And so like this
Mm,
system took a drawdown that was like, whoa, back in February of this
right.
year. And I was like, ooh, that
Back half of
stings.
February.
This February, yeah, this February.
Back
So like,
half. Last
yeah,
week or
yep,
two.
yep,
Yeah. I mean, you could see like, whoa, this is this is not
that's
how it's
right.
supposed to be going.
That's right. That's exactly right. And so usually when we see that kind of pain and drawdown hit, I'm like, okay, the markets are probably going to start to soften up here. And I mean, obviously, softened up a shit. Soften is an understatement, right? I did obviously had no idea it would, unravel like the markets have.
Right.
So, but it is curious, right? And that is something you could take away too. I mean, if you're a ground, if you're kind of a bottoms up trader, you're really in the trenches, kind of trading stocks. Like you can kind of get a sense of market sentiment early sometimes, but yeah, anyway, so we have a little bit of exposure. We bought some things yesterday morning, felt like a hero for about 12 hours, and we're still holding a lot of those things. So
Mm,
today's again a give back day, but
for sure.
that is the way it works. So
And then, so I consider you one of the one of the best rules-based traders I know. And I just want to say, like, big question right now. Yesterday, Scott Bessent was asked, "Hey, so trade war with China escalating. Uh, would you consider like delisting these stocks?" And he's like, anything's on the table. So, what do you think about managing that situation with China right now? Because we've gotten some pretty good pullbacks. You can argue there's some technical buy points around, and but the delisting risk, that's an interesting thing. And how do you quantify it, even, right?
yeah, I think if you're gonna play China, I think you got to play it with options. I think you got to try and do some defined risk strategies. Like, if I want to buy CQQ or FXI or even Alibaba, like I don't want to shell out a ton of share equity risk on that. Like
Right.
I'm going to try and create some type of synthetic long. Maybe I'll sell a put, buy a call, or something, some out of the money put, or just try and reduce that risk. That's the only way I would really touch it.
Yeah.
China for me has just always been, as much as I always stare at those charts and I like, oh yeah, this is the time to buy. I just can never get myself around to pull the trigger on it. So I think you gotta be careful, but
Yeah, it's tough. I know a lot of
it's
people made a lot of money in those China AI plays, and it's interesting because 2 months ago, just every day they couldn't get enough of it, and
yep,
now it's just whew,
yep,
global enemy, and
yeah, it's a risk.
it's
Yep,
tough. It's tough.
yep.
And then yeah, so one thing I really wanted to talk about is in times like these, we really have to keep on top of our game here, track our results, keep measure our trading performance. And the main way I do that, I've got one way to do it. It's called the Kalmar ratio. And
Yep.
I'm just going to break down how we do it here. Okay, every day you track your closing balance at the end of the day. You throw it in a spreadsheet, and you just do that day after day after day. And then what I do personally is I track the monthly annualized rates of return over X period. The total sample for me is I just use a trailing 3 years. But you can do weekly, you can do daily, just anything you want to build a sample size, right? And then after you calculate all those, you throw them in, you divide it by the largest drawdown you've had over the total period, so the 3 year period. And yeah, basically you're trying to have a number above five, but two, three, just about higher, the higher the better, right? And look, that just tells you no matter what you're doing, no matter what your strategy, no matter what you think, that's just a good way to measure how's my trading going.
Love it. Yep, love it. This to me is pretty much one of the most important metrics that I pay attention to is it when I'm building systems or coming up with new ideas. I mean, I'm looking at usually like the MAR ratio, which is essentially the same thing. It's just looking at like, give me everything, like show me your whole track history, and I want to see your rate of return divided by like your max drawdown, because you're trying to find the uncle point, right? Like, because at the end of the day, everybody's so focused on returns, and like, I get it, I get it, but if you can't stick with something, or if you're going to throw in the towel at the exact wrong time and you can't follow something because you cry uncle on that max drawdown, what's it all for, right? Like, you have to be able to have a durable system. So max drawdown to me, most important metric by far,
Absolutely,
100%.
because if
Full
you look
stop.
at the market math, it just look
Yes.
the best way to higher returns is to have less of a drawdown, so those other trades can stack on top of each other and eliminate the big losers. I mean,
Yep.
the way it is, I think. And focus on your drawdown. Uh, Everything else should probably take care of itself as long as you got a plan, as long as you got somewhat of a system, as long as you demand a much more reward for the risk you take. You should be good over a period of time.
Yeah, or just buy options and never log back into your account, and you just hope
Ooh,
that they.
ooh, I like the never log back into the account idea. I think I'm going to do that today. We're just going to shut it down and just, take
Call
a
it a
summer
day.
trip for 9 months. All right. So let's
Uh,
see. Let's catch up on some market action here. Oh, man. Oh, man.
yeah, down 6%, getting a little bit of a bounce here, but we're giving back. I mean, it feels like the market's just going to want to trade out that whole spike, that whole news spike. And I mean, I guess it almost did. That'd be about 500 in the SPY. So we
Okay.
got
Yeah.
we we got the 509 down 6%. Yeah, it's a brutal for anybody chasing today. I mean, that's a little tough.
Yeah.
Um,
Look at that daily stick. My God, just madness. But, it's fun. You get these big moves and look, it's an inside day.
it's fun. Yeah, it's it's
Max
fun in a
Max Goldstein, I'm guessing, says, "What up, rotation report? What up, Matt?" Or
nice.
Max.
Thanks for tuning
M
in, Matt.
Chromatic, IDR, gold and rare earths. Let's go. Let's go. Ooh, Idaho Strategic Resources. Yeah, because, right? No, that makes sense. This has a bid because,
Mm-hmm.
get away from China. I've got one that actually I'm looking at on the sell-off. Look at Albemarle. I think that's how you say it. What a name, huh? Albemarle. Anyways,
What
uh,
is it?
it's a lithium play.
Oh,
It's I think
yep,
it's like I'm not sure if it's processing, but anyways, we've been waiting on this breakdown to about 50
yep,
right around here. This
yep.
whole time it hit yesterday from this big old top here, big old top. Finally
Interesting.
broke down. Finally, kind of meets the measured move area, and
Yep.
very interesting around here. So I love the idea. M Chromatic. That is, yeah. This Albemarle is definitely on the watch list, and if you're going to fight back against China's unfair trade practices, you know what? Let's look at First Solar while we're at it. That 120, 125, 130 pivot area. That's still kind of holding in there. I mean, relative to the tape, huh? I mean, could be worse. Uh,
Every
but
time I look at the tan ETF, all I do is get flashbacks to like the weed like MSOS or like or MJ or something. I know they're totally different, but God, it just gives me such flashbacks, scary vibes. But
yeah, that's a good one. I mean, yeah, no, definitely similar vibes. But yeah, you want to talk about the China trade crackdown and all the stuff that they steal the IP and then they sue you in courts and it's all a disaster. Well, China Solar, Jinko Solar looks
yep,
like a fresh big old breakdown there. So you know,
yep,
yeah, if they're serious about it, and they seem to be, I mean, these are the type of China things we definitely want to avoid.
yeah, yep. Those are all different tickers. I've never looked at any of
No, not even during the COVID boom. Come on, man.
them.
Come on, man. And then, oh, look. Hey, I found some green on the screen.
There it
That's
is.
the only green on the screen. Gold
There it is.
miners, new move high. Interesting.
Yep. Yeah, that's all that's been showing up on my moment. Well, I mean, it's just what I've noticed dominating is gold miners, and they're just coming right back strong again. I mean, it makes sense. Gold's back to what is it trading at now? I forget how many.
3170. What do we think?
Yeah,
3180. Oh,
new
okay.
freaking highs. It's amazing.
Right
Uh,
back there. Yeah.
Yeah, yeah. GLD. I mean, I tend to trade IAU or own it, but that's part of our longer term Galahad system, and it's so funny because like when I talk to folks about owning gold, we keep a 10% slice in there. I mean, it's
Mhm.
quote unquote boring, right? Everybody gives you shit. Oh, it's gold. What do you? Oh God, 10%. That's the best thing. I mean, it's up 50% in like 2 years now. I mean, it's insane.
Time to do some calls. Time to have some fresh
Yeah.
calls and see how they feel now, huh?
Yeah, right. So yeah, this thing has been helping so much on portfolio performance, but it's a monster. I mean, it seems unsustainable, but it climbs higher she goes.
Yeah, and I'll point out again, we've been talking about 3320 in the gold futures. Big
Yeah.
Fibonacci extension confluence. That is the target zone. And let's see if we can. I don't think we. I don't have the updated data on gold versus S&P 500. But if you're looking for, hey, when is
Yep.
this this defensive kind of environment going to shift? Get this gold versus S&P 500 up to 0.67. Let's just go 0.666 for fun. And you know,
That's good. That's a good one. I like it a
yeah,
lot, actually.
a lot of resistance around there, and that might be where the Fed blinks. I'm guessing somebody else is going to blink right around there.
Yep. That's a clever chart. I like it.
And
Nope.
then, oh boy, let's see what else we have here. OIH down 10%. What do we think? End of global trade. Oil producers and the whole industry just doomed now.
Hey, I mean, oil did go negative once before, right? Who's to say it can't go negative again?
Could be a
Uh,
meme, huh?
yeah, this is
And I'll do
wild.
it
That
again.
the energy move was definitely something that had my jaw on the floor on yeah, XLE, oil, everything this past week was pretty ridiculous. I don't have any direct exposure. I'm certainly, so my temperament is a buy the dip kind of person. Like
Hmm.
I'm not a breakout guy really. I love like buying blood and panic. And so like days like this and weeks like this, I need to like stay away from the screen because I just want to buy everything. But
Yeah,
um, it's a big move. Yeah, it's a big move.
naturally. Yeah. Yesterday we closed at 63, and I have a updated chart. I think you can say pretty much this recent low is the one to watch in the WTI. Like technically, it could still be holding this long-term downtrend break, but we'll see.
Yeah.
We'll see about that. You look at the XLE now, boy, oh boy, boy, oh boy, did that thing coil up for like what since the Russian invasion of Ukraine?
Yeah,
So we
pretty much.
that is
Yeah.
a ton of supply there. Uh, I was going leaning the other way
Me too.
with it, and
Yep.
I think a lot of models broke, like I
Yep.
said last Wednesday, and
Yep.
we've got Oxy had a nice bold divergence, and that thing just, whew,
Yeah.
whew.
What's Chevron looking like now? Because I was tracking that for a little
Oh
while.
boy, yeah, look
CVX.
at that.
Yeah.
2024 low area. I guess it's better than some, huh?
It is better than some, yeah, because that's the one I was going to pull the trigger on. Right as, yeah, right before all the shit started hitting the fan, I was watching in the 165s area just to see if this wants to start to lift out of a multi-year range. And
Yeah, look
zoop,
at that.
opposite.
Not bad. Not a bad area here. I
Yeah.
mean, at least for the moment. Like,
Yeah. Yeah. Yeah, the names that I've been watching a lot of the so like Constellation, CEG. That's been on my like go-to list. I will say so like obviously the chart's pretty horrendous here in the past 2 months, but even just look at the last 4 days action. I know we're not getting much, but this is whole. I mean, we're pretty well off that 160 puke. This is holding up relatively better than like rest of market. So this is some place I'm watching here. Again, not out of the woods. It's messy. It's choppy, but something I'm paying attention to.
Max Goal says, "Boy, oh boy, is Aaron's go-to." It might be. It might be. Probably. Yeah, something like that. M chromatic. Have you used relative rotation graphs, Evan? Do you use that?
No, not really. No, nope.
I have, and then you can adjust the tails on the stockcharts.com
Mm,
platform, and then you can make it say whatever you want. And so I just avoid it because I can just,
confirmation bias.
yeah, you can make it do whatever. I kind of just watched straight relative strength, just a name versus the S&P,
Yes.
a name versus the group, divided versus the group, and
Yep.
go from there. But
Same.
back to the Constellation. The services revenue pretty going to be in pretty good shape, pretty rock solid for as far as the eye can see.
I think, yeah, and I think, yeah, we just had a bunch of CapEx get reiterated. So I like Seg. This is a place where I would be dip buying. I haven't, but I'm watching it, and you could look at like VST, VRT, like a lot of these kind of like data center, AI, nuclear, clean energy. Like I am watching this space because again, I think the trend. It's hard for me to see that secular trend break down. I think prices could certainly dislocate for any number of months, but it's a space where I think there's going to be some earnings power.
For sure. That's
Yeah.
just a matter of, hey, every momentum fund in the world owns
Yes.
it. Every levered
Exactly.
trader in the world owns this thing, probably
Exactly.
still has some shares because, it's, yeah, safe, stable revenue and
Yep.
earning stream as far as the eyes can see. And it's just a matter of, okay, but that does, what matters more, right? We're saying all these nice things about the stocks, the industries, and they're all completely valid. What matters at this point, if it's all priced in and everybody's already in, how's the system doing?
Yes.
Is the system? Are we going to have like a sort of breakdown here in the system? Because that'll do it, right? I mean, there's
Yep.
been many a times in history when you're like, oh, everything's intact, future's bright, and oh well, right?
Totally. Yeah, totally. It's exactly right. There was a massive degrossing and deleveraging that has occurred here in a lot of these specific stocks because they were crowded hedge fund trades, and now they're kind of broken stocks. And if things break even further, you've got the risks.
Yeah, and one more. I know the bank earnings are tomorrow. I think it's J.P. Morgan. I know Morgan Stanley. We talked about BlackRock. This is the one. BlackRock, Blackstone. Keep an
Yep.
eye on these guys. Both bottomed right at the 200-week moving average this week. Um, they say there's a lot of dry powder out there. Okay, show us, prove it. How about now, right? Like we got to check in on that because big losses of momentum lately, fake breaks of the 2021 highs, and you could make a pretty good case that a mad orange man breaks this thing down in a big way.
Yeah, I'm looking at some of my holdings right now in my short term in my Lamerick swing trading system. I've got one green today. O'Reilly, ORLY. So this is a full disclosure. It's a stock I own that I'll probably be out of by the end of. Well, no, tomorrow's Friday, but I'll probably be out of it soon. So I'm not. This is just a trade,
A green
but
stock. Look at that thing. What a
pretty
beauty.
remarkable strength right there.
Wow, just a matter of time before someone else sees it and is like, yes, some liquidity.
Exactly.
Exit.
Yeah. Here comes the
Exit.
rush. I know.
All right. Oh boy. Yeah. SMH down 9%, 8%. That could
Yeah.
be worse. Could be worse. Let's see. Let's take a look at the old SMH. Yeah, no. Oh, a good tell right now. I'm looking at this DoorDash. You could say it was a big old
Yeah.
pop here
Yep.
recently, but you had the 200-day moving average come in. So
Yep.
you want to say, hey, is there actual, tightening of spend among the elites? Well,
Hmm.
there you go. There you go. Keep an eye on that one. You take out this week's low. Okay, they got a problem probably. Until then,
I can't believe the year that had in 24. That was
it's a lot of
remarkable.
stocks. No matter what they do, what business,
Yeah.
even your Walmart. That's the weirdest. That's the thing that I've been wondering about the most. Like, how does Walmart, with such little earnings growth, have such a strong year? Oh, they're
Yeah.
like, oh, the trade down, but like, the numbers didn't really match with the narrative.
Yeah. Yeah. Still pretty resilient there. Same with Costco. Both of those suckers. I mean, Costco is just such a cold. I've never had a membership. We got BJ's around here on the Northeast. I don't know.
Okay,
There is a Costco, but nothing's been convenient to me. But I know there are such loyalists over there too. too.
selling gold bars and hot dogs and all sorts of fun shit.
Yeah. Okay. So Hood, I like. What are your thoughts on Hood here?
I don't know. I see this distribution in the back half of February when the whole freaking chart book started to implode, and I'm like, that is a lot compared to the accumulation over here. And I'm actually impressed that it held up here and got actually back above that 35 area. Yeah, I don't know. I think I'm good. I think I have 1,000 other ways to lose money in this market, but you know.
I love it. This was a stock I was bidding for earlier this week, but I didn't get filled. I had bids below 30. I forget where. The high 20s. I was willing to be a buyer and step into some liquidation, but I didn't get it. Got close, but yeah, I'm not chasing it here. I can't chase it here, but I
may-
do.
Maybe that 35.
Yeah, I like the prospects here potentially. We'll see how it sets up.
Yep, I'm telling you, I think in general the message is gonna need a couple of weekly closes here, and hopefully things don't blow up. And yeah, I'm thinking that's a pretty good place to wrap it up. It's just patience pays. Is the bottom in? We're not gonna know. We're not gonna know how this is gonna go with China. I haven't heard anything today on China's retaliation. I think we're still waiting. Could be wrong. Maybe that's why the market's down so
Hey,
much.
we could be at 200% tariffs now. Who knows?
Who knows? So we're just going to have to see how that plays out. I mean, some people speculate, oh, they're going to take Taiwan. Well, I don't know about all that.
Yeah.
Their messaging with the world seems to be, we're the good guys. So you can't just be the good guys and then do that. So
Yeah, I think we got a new high in the VIX here too, so that's going to be a little concerning. Or no, maybe we didn't break out to new highs. We're close though. I think we're above 50.
Jesus,
Something.
50? Yeah. Yeah.
So we got, if the VIX is still climbing, I think we got some worries here.
It does seem to be leading. I don't know. We'll see.
Yeah, we'll see. We'll see.
All right, let's see. Do we have any headlines? Any headlines out? Oh, 30-year bond auction coming up today, I think, at 1 o'clock.
Yeah.
Okay. Okay.
Yeah, look at that rejection. I mean, we did look at it, but that the long bond here, man, the last 4 days, quite the spectacular reversal lower.
Yeah, but I don't know. I think, like I say, Monday lows. You got a lot of good Monday lows to shoot against if you're looking for
Yep.
more than just a trade, right? I think if you're looking for a trade, well, oops, yeah, you might have already missed your exit point. But longer term, there were a lot of good stocks that found some really nice supports there on Monday. So, keep those in mind, and we'll just have to see how it goes. And any last words for the people, Evan?
Nope. Good luck. Good luck. Good luck. Manage on that. Pay attention to those levels. Risk manage, MAR ratio, all that good stuff. I mean, look, it's dangerous out there. Risk and opportunity. So
Awesome. Well, hey, man, thanks for joining us today. And again, everyone, check out Evan at Evan Medeiros on the FinTwits and the traderisk.com, is it?
that's it. Yeah. Thanks for having me,
Awesome.
Aaron. Appreciate it. Always fun to talk. And yeah, enjoy your stock market, right? Or what was Trump's quote? I don't know. Enjoy your whatever he said. Enjoy
Yes,
playing with your
enjoy your
stocks.
Yeah, we're all enjoying our liberation. And
Yeah,
yeah,
there it is.
so